In this video, we're going to look at the metals, some energy ETFs, and a couple currencies, and review the week ending July 29th, and maybe get a handle on what we might be able to expect from these asset classes for the week beginning August 1st. And the first thing we're going to look at is SLV. That's the silver ETF. And we'll just zoom in on the trading range. In the 26-day midpoint is heading up. The 9-day range indicator has kind of flattened, is tipped slightly up, but the cloud is pointing strongly up. So the drift on silver is definitely up. And let's take a look at the trend quality chart. And this is another graphical representation of the strong upward drift in silver, with the 40-day up strong and the 20-day now flat to down. But we can see that the slope has moved strongly higher, so we can anticipate, at least for the week ahead, that SLV will probably drift higher during the week ahead. And the 20-day forecast puts it out at about 2073. So that's another 1.5 points that we can look forward to maybe in silver over the next couple of weeks. But the basic tenet is, if you're holding silver, SLV, to hold long until we see a candlestick sell signal. We're going to look at gold. We reviewed gold in the general asset classes, but we'll look at a couple different charts. We'll look at trend quality. Gold has the upward drift, and like silver, the 40-day trend pointing higher, and the 20-day coming off a downward drift with the slope now heading higher. And we can see, well, let's look at one thing. Let's zoom in on the trading range, because I want to demonstrate one aspect of the Heikin-Ashi chart that I find pretty interesting. Let's zoom in a little more. The red bars indicate a downward drift in prices, and the Heikin-Ashi candles are candles, but instead of using one-day high-low close, open high-low close, they use 2 days. So they're still candles, but it's 2 days of data. But there's an interesting phenomenon that occurs only with Heikin-Ashi candles that's reliable and worthwhile to notice, is when you've had, say, a downward drift, as we've had here, and you get an inside candle, it's a doji or small body candle, that often precedes a change in trend. Not always, but often. And when you get a multiple series or a series of dojis or inside bodies, the same applies. And we'll just show you how you can use this as a very simple trading method. This red body was followed by this doji, and the buy signal would be when a green candle, because it's at the bottom of the range, or it's at the midpoint of the range in an upward trending underlying, so we'd be looking for a move up from that point. But if you just indicate or just measure or look at the high of the enveloping candle, the candle that encloses the small body, when price breaks above that high in a green candle and continues, that would be a buy signal. And I mean, there's nothing that could be more simple than that. And you can confirm it with the regular candlesticks and the breakout chart patterns. But gold is heading higher. We have the 20-day out at about 133.45. So that's about 5 points from now. And gold has a good ATR of 1.4. So you can trade the ETF itself. It moves enough to cross 1 point strikes in a single day, which is good. But maybe more important than the gold and silver ETFs are the miners, which have been individually probably the best performing sector or industry since the beginning of the year. And the miners are on a buy signal. And again, let's just flip down in here. And we can see the series of red candles going into the low. We had an enveloping candle here, a doji, but price broke below, so it was not a signal, not a buy signal. And we're only looking for buy signals because we're at the midpoint in an uptrending underlying. A red body enveloping a doji, a green candle broke above the high of the enveloping candle, and a buy signal, and GDXJ was off to the races. And we can see that's being confirmed by the volume spread analysis, which is showing buying pressure. The Chaikin oscillator is heading sharply up, and accumulation distribution has been positive for several weeks. So the gold miners, even though they've performed spectacularly since the beginning of the year, appear to still have some life in them. And let's zoom back out. And it's GDXJ is approaching the top of the range. This is the price area that we're reluctant, at least, to initiate a long trade in this index. But it's worthwhile to dig into GDXJ, see what its components are, and look at some of the individual mining stocks. And if you find any of those in a good position, that I wouldn't hesitate to go long those. And in fact, we did. We went long Heckler and Kinross Gold late last week, and they're both performing okay right now. So if you're long GDXJ, hold long and wait for the candle signal. If you're long gold or silver, hold long. They've all performed well. We would anticipate that there's going to be some reversal at some point, but it doesn't appear to be tomorrow. Okay, oil, we talked about oil in the asset class video. And repeat it again, I mean, oil is not showing any indication that this downward plunge is going to end anytime soon. And because it's at the bottom of the range, our rule is to be reluctant to initiate a new short from this level or at this level. That if USO did rebound, that we would entertain a short, even if it rebounded to the to the level of the the 9-day trading range. Particularly if it rebounded toward the midline, which we're not anticipating, but if it did happen, I think that would be a terrific shorting opportunity. You can see the volume spread analysis. That's a very strong downward pressure, Chaikin, and accumulation distribution heading south, but with little hooks, so maybe it'll slow down or even bounce a little bit on Monday or Tuesday early in the week. We'll have to see, but at this point we absolutely would not entertain a long in oil, discerning the information that we have right now. Of course that could change, but that's not the case right now. We're going to look at a couple currencies. One is the Euro, FXE. And the Euro, like the FXE, which we looked at earlier in another video, gapped up from the bottom of the range. And I'm going to show you this one more time with the Heikin Ashi. We had the series of red bars. We had the enveloping bar, the doji, followed by a green bar that broke above the high of the enveloping bar and provided a good buy signal. And it would have been fairly early too. You would have been in on here, just a little above 107. So that happens more often than not, and if you weren't aware of that, it's something you should take a look at and experiment with so you feel comfortable for yourself. The gotcha on FXE is that we're not getting yet the strong buying pressure indication. So we'll have to see, but hold long, because we did get a long signal. If it started to fill that gap, I would probably bail out or be inclined to bail out at that point. But if not, give it a day or two and see if the buying pressure comes in and if it can move this higher. FXE we looked at in the asset class video, and as with FXE, we had a bullish kicker, which is a very powerful candle. With FXY, we do have the buying pressure behind it, and the short-term Chaikin oscillator and longer-term accumulation distribution heading up. So for FXY, it's hold long and get out or cover your long if indeed it starts to fill the gap. But we looked at a correlation chart for the FXY. Let's look at the FXE. And first we'll compare it to the SPY. Click calculate here. And there's a low negative correlation between FXE and the SPY. But one benefit of using these charts is that, you get the number minus 32.33. It's a low negative, okay. But again, as in the FXY, that correlation seems to have been broken more than once. Here we have the FXE heading south and the SPY heading south. This was Brexit. After that, the SPY moved up, FXE moved down, and now FXE is moving up and SPY is drifting slowly up. So I don't think you'd ever really want to trade based entirely or only on correlations, but it's something to look at, something to be aware of, and in my opinion at least, I think that indicates more the vulnerability of the major stock indexes than it does an immediate reversal in the euro currency. But we'll just have to see how that plays out. The interesting, or potentially interesting, play in the currencies is natural gas. And here's a weekly chart of natural gas. Now, UNG is based on the next month or the near month futures contract. And it's only one contract. So you don't have this combination of the near month, the month after, the month after. With UVXY and with some of the gold futures contracts or ETFs based on gold futures, where the fund managers have to sell the near month and buy the more expensive far month, every day, every few days, every week, which constantly erodes the value of the ETF itself. But UNG is based only on one contract, the near month, except for the last 2 weeks when they have to jump out and start purchasing the next month coming up. But UNG's gone from almost 24 down, to 5. And one thing we want to look at here, this is a weekly chart, is the Hull moving average. And I won't get into how it's calculated, but it's calculated a little differently. And you don't really look for crossovers with it. You simply look for a change in direction. And when it's green, it's heading up, and when it's red, it's heading down. But we can see that now the Hull moving average is green for UNG, which is bullish and positive. So we're looking for UNG to continue higher. And if it does, particularly if it starts pushing the upper boundaries out, that's going to require another more in-depth look. Because one of the best plays of the year has been the oil producers, even though USO has been dropping like a rock, the oil producers stocks have not. And if we can get that same kind of phenomenon between UNG and the primarily gas producers, there could be a new theme in the market that could be quite profitable. That's something we're going to have to look at. All right, those are the metals, a couple energy ETFs, and some currencies for a look ahead for the week beginning August 1st. I hope you got something useful out of it.